Good morning, stock investors, stock traders. Welcome to the Friday morning live stream. My name is Victor, and I'm joined by Daryl. How you doing this morning, Daryl?
Doing very well, Victor. It's good to be here. Thank you.
It is great to be with you. I am looking forward to our stream because we've had a very volatile market. Really, since October 28th, we've begun to see a market that had a good number of sellers and some famous ones. Michael Burry coming out and saying, "Hey, I'm going to short Nvidia. I'm going to short Palantir." And boy, that got under some people's skin. But at the end of the day, Mr. Burry is, to this point, he's got a little bit of credibility. Market's been coming down. And in general, some other investors, Peter Thiel, I think, decided to sell his Nvidia stock. The SoftBank selling of Nvidia. Also, I would add to that, that just shows that some of these awesome businesses that have stock prices that are really expensive are beginning to be sellable to a lot of portfolios. And that, I think, is going to take us lower. We are down roughly 5% on the S&P from the recent high. And just generally, I'm not the chart wizard. Daryl is. Daryl's really got a handle on charts. I'm more of a fundamental guy. I took enough economics in college and studied the economy enough to look at the big picture and just see that this market has momentum to the downside. It's just the way it is. Now, I think that we're going to continue to go down, but I'm going to let Daryl kind of take us through some of the information that he's seen. But overall, the market is in a really tough spot. I don't like seeing my portfolio go down. I don't think you guys do either, but it does provide opportunity. Let me get to that later. For now, let me talk about Bitcoin. The pain is extended over to our friends over on the crypto side. Bitcoin for a while was looking great. I own Bitcoin, so I am an investor and really love seeing the coins at $124,000. But since October 7th, the Bitcoin is down 32.4%. That's a pretty good sell-off. That is a bear market / crash in Bitcoin. And look at this. Look at the sell-off. Bitcoin doesn't have fundamentals. You know, it's not like we have a floor of, hey, the cash flows it generates are X, so it shouldn't go below this number. No, it's purely a crypto asset. So those that want to hold it long term are going to hold it long term. I haven't sold any of my Bitcoin. I don't plan to sell any of my Bitcoin. I was actually thinking the opposite, which is maybe I could buy a few Bitcoin. Maybe I could buy into, this crash. So overall, the sell-off is upon us. It's not bad news if you're a long-term investor. When we look at sell-offs, they are good news for the prepared investor, the investor that wants to take advantage of these sell-offs and load up on companies that the investor wants to own. The perfect example, not too long ago, 7 months ago, the world decided we're going to have tariffs and we're going to really tough it out, country to country. That created a big stock sell-off. It created a big opportunity for investors that wanted to buy some of these really good names. And we took advantage of it. Great. Now we're nowhere near this point. The S&P was down like 19% on this occasion. So right now we're down 5. So we're nowhere near this point. So we just got to kind of deal with it. I'm a dollar cost average guy. So every day that I see certain stocks sold off, I buy. And I'm good with that action. So today we've got an agenda. We've got a couple of stocks in store. We'd be happy to cover stocks that you would like to look at. Put that in the chat. and we'll go over it. But I wanted to turn the screen over to Daryl, who's done some prep and wanted to go over the SPX as well as Nvidia. The floor is yours, sir.
Okay, so just an update on the S&P 500. So Monday morning on our call, we drew these two horizontal lines. I've had this auto resistance line setting here for many months because that was at the high of high close of 61.44.19. So I've had that as a marker on this chart. And then Monday, we added these two horizontal lines. And yesterday, we did break below this upper horizontal line. If we hold there through today, then this next level at, let's see, at around 62.34 will come into play, in my opinion. And that would be about a 10% pullback. So I'm watching this level very closely. Today is also monthly options expiration. Monthly options expiration day tend to be pretty volatile. So that's kind of what we're in store for today. I do see that the 5-day average of the put call ratio is at about the third highest level for the year at the moment. We reached a peak on April the 8th during the tariff announcement sell-off. And then on August 1st, we peaked above that just slightly, but we're sitting, it's at the third highest level right now for this past year. But it hasn't really peaked. I mean, the daily put call ratio is actually already coming down. So I thought that was a bit interesting. Also noticed that money flow is negative right now. We were negative at the beginning of November. We went negative in April 2 times, and then during the drawdown towards the early part of the year, we also saw negative money flow. We can take a quick look at the VIX as well, because that spiked up yesterday above the level that we saw on the 16th of October. So we're currently sitting at 26.42. We don't have a 50 period crossing over a 200-day period here, but this is definitely something to pay attention to, and it's showing a lot of anxiety in the market at the moment. Then if we just want to go and look at Nvidia.
Yep.
So we'll do that, because yesterday I mentioned that if in the Discord, I mentioned that if Nvidia closed below yesterday's open, that we would have a bearish, basically an engulfing candle. And that's exactly what we got yesterday. Really can't be called a bearish engulfing because we are already in a downtrend, but it definitely engulfed the candle from yesterday. But one thing I'd like to point your attention to is just some previous times we've seen this. Now, this here was really a bearish engulfing candle. And the thing I just want to point out is we only had about I have to go back down on the screen size to see that, but that was basically a 7% pullback. We had another engulfing candle here. And if I just look at the magnitude of the pull down, it was about 4%. We had one right here. So we can Scroll up there and we had a engulfing candle. And then if I look at the drop from the peak, that was a 14%. So these have come into play on Nvidia several times this year, at least 3 or 4 times this year. And I just noticed this one yesterday, so I thought I would point it out. Still points to that we probably could go a bit lower on Nvidia, and the max pain for options expiring today sits at 172. So that would we're only about $8 from that at the current moment. So anyway, that's my little spiel. I just want to make everybody aware of what we're looking at and what we might expect here over the coming weeks. The next 2 weeks actually tend to be pretty good trading weeks. Typically, the professional traders are not trading, especially next week. It'll be very light volume next week. So that week and the following week tend to be pretty okay weeks. The following week, mutual funds start selling to rebalance and to provide their distributions for the year. So the first week of December tends to be somewhat of a typically have pressure on prices. So we have 2 positive weeks somewhat ahead of us from a historical point of view, and then we have the first week of December that we'll have to watch because of mutual fund trading.
Yeah, you bring up a good point that next week we have Thanksgiving in the US. It's going to be low volumes. And I think in a big way, people use the week as hey, I need to decompress, spend time with family, travel out to maybe enjoy Thanksgiving dinner with extended family. And they kind of put their portfolios off to the side. So that totally makes sense. And I think December is going to be where all the action is going to happen. And December may or may not have a rate cut. I think last time we looked at it, there was a very little chance that we were going to have a rate cut. So I don't think the rate cut's going to take us higher. I think we're left on just pure, what stocks are good to buy and which ones are good to sell. We've got a first super chat sponsorship by Shamba Basher. Thank you, sir. And he's looking for ideas to invest what is 900, is that pounds, British pounds? So we never provide financial advice, but let's kind of cover a few things. He also wanted to see Grab, so we can take a look at Grab. I put that on the list, so I've got that. The other comment, Hood is up in the pre-market. A lot of things are up in the pre-market. One thing that really did, again, I want to emphasize that the pullback intraday yesterday is concerning to me. When you have a market that went up and then came down harshly, and that's what it did on the 20th. It jumped up and then it came down pretty hard. To me, that is a pretty strong signal that you can't trust these pre-market, positive markets. I'm not going to trust them. For all I know, we're going to open higher and end lower. So how does that adjust my buying? Is I'm going to wait until the end of the day to buy. If I'm looking to buy, I am looking to buy today. I think certain companies are priced quite well. So I'm buying, as an example, I'm buying Amazon stock. I think that's a really good buy. I'm buying Allstate Insurance. I'm buying UnitedHealth. I'm buying Meta. Maybe mix in a couple of small caps. I'm buying TX in materials, and I'm buying a couple of other small caps. So I'm going to wait until the last 2 hours, maybe the last hour of trading today, because I'm not trusting those opens right now. Yesterday kind of left an impression on me. I'm probably going to operate that way. I'm not a day trader, but it would be a little frustrating if I bought early in the day and then I saw the market sell off and I'm like, oh, okay. Everything that I bought is down 1%, 2%. I'd rather just wait. Okay, what's this market going to do today? Get rid of the noise and then buy. So that's what I'm going to do. Let's get into some stocks, and we're going to start. So we covered Nvidia, and let me just go over some comments on Nvidia, and then we're going to go over Grab, and then we've got a couple other stocks we want to look at. So Nvidia had excellent earnings, just A's across the board. That was never the question, or I should say, I expected that. I expected Nvidia was going to have very good earnings. What I didn't know was how's the market going to behave? And the market is basically making a statement. Hey, stocks are expensive and we're going to sell stocks off. Even the real good businesses like Nvidia, that come in with excellent earnings. Even Amazon, even Meta, go down the list. There's some good companies, Uber, that are being sold off. So the market just wants to bring down these PE ratios, wants to bring down these elevated price levels. I think it's good. If you want to buy Nvidia, if you were thinking, I want to buy Nvidia, I think it's going to go higher from here. Let's take a look at the valuation. I think we're near fair price. So Nvidia is rational right now. If it goes down even further, it's going to be a better opportunity. But Nvidia pricing looks pretty darn good. Let's look at another high flyer, which is Palantir. So when I value Palantir based on cash flows and earnings per share, that one's still a little underwater. So that one's not a good example. AppLovin. This one's been a high flyer. And that worked yesterday, by the way. AppLovin was up because it's had a pretty harsh November overall. But these are stocks that were flying high, have been beat up a little bit. And that's okay. It's okay if they get beat up a little bit, bring down that price. And ALAB, which is a very volatile semiconductor stock, but has terrific fundamentals. I'm still 11% away from where I think I need to buy this stock. If it gets to 120, I buy, but I can't buy at the current levels. It had a very interesting day yesterday. It was up 11%. Where did this stock end? Astera Labs is just a very, very volatile stock. So it went, look at that. It went sky high and then it came down. So intraday, this stock came down 12%. And overall, this has been a good stock to own for me because I bought at the right times and I'm sitting on a gain. But you see this volatility. It's a monster stock that's going to go up fast and go down fast. And it's in the pre-market, it's going up. We'll see if it can hang on to that gain. The other stocks that are getting hit pretty hard, let's take a look at Nebius. This is over in Europe, and I didn't mean to do that. Let's see if I can get out of that. There we go. So Nebius yesterday it didn't go down as much as I thought it was going to go down. It went down quite a bit intraday, but over the 5-day, it's looking pretty decent. Over the month, not so much. And Nebius had been just performing fantastically, right? 284%. This is a cloud infrastructure play, a data center play for companies that want to build AI, need accelerated computing. They can go to Nebius and rent out some of their capacity. They're headquartered in the Netherlands. And I know a few members of this channel own Nebius. Congratulations. but it's gotten a little volatile, to say the least. So that's what's going on out there. Let's take a look at Grab. Grab is a delivery company, and they operate in Cambodia, Indonesia, Malaysia, Myanmar, the Philippines, Singapore, Thailand, Vietnam. Delivery, mobility, financial services, and others. And their business is similar to, let's call it DoorDash, Uber. They do it in those countries. A lot of people on, motorcycles or e-bikes delivering products and delivering food and all kinds of stuff. How's the stock been doing? For the 1 year, not so great. Year to date, not so great. Now, when I look at Grab, I always end up thinking that Uber is a better option. So I'm going to open up Uber and DoorDash as well. We'll compare Grab to Uber and DoorDash and see which one. Put them in the battle royale. They're going to go in the ring and see which one is going to be the best investment. So this is a $20.35 billion market cap business. They have $3.23 billion in revenue, very high PE. Forward PE is also very high. Analysts think there is a discount available. We have 8 analysts covering it, and they think that it's operating with a discount. The growth is good, but not incredible. They are relatively small compared to DoorDash and Uber. So if you're smaller, you should be growing at a higher percentage rate. You just have the mathematics are in your favor. Growing a smaller number is easier than growing a big giant number. Now their profitability is going to grow fast. So that's good. Bringing down the PE ratio down to 20 in 2028. I think these PE ratios look a little expensive to me. Okay. Now let's take a look at the compare against some other companies. And we'll go with DoorDash first. DoorDash has been selling off. It's had some pressure lately. So the pricing has gotten far more attractive on DoorDash. This is an $80 billion market cap company, bigger than Grab. Revenue, you're buying the business for, call it 6.5 times revenue. P ratio is elevated for the current year, dropping to 31. P ratio is a little better than Grab. And the price targets are 49.5% higher than the current stock price. So all analysts have a price target above the current stock price. When we look at DoorDash, the percentage growth is better than our friends over at Grab, but their number that they're growing is much larger. So that's more impressive, much more impressive. They're going to expand their profit quite nicely. These numbers look really good. And they too, in 2028, are going to bring down their PE into the teens. So that looks really, really good. Now, when I look at those fundamentals and I look at how the market's been selling this stock off, this smells like an opportunity. It really does. So let's put that off to the side for a second. And then I'm going to show you the valuations. I think I have all three, and I'll tell you where I value each company. Then we got the biggest player that we're going to look at is Uber. Uber is at $173 billion, humongous, 49.6 billion in revenue, much larger than both. P ratio is really low this year, 24.6 next year. Analysts do think that there is a discount. It's had a pretty good little pullback here. So opportunity, maybe. It's an opportunity for me. I own Uber. I used to own DoorDash. I did well with DoorDash. I sold it. And I'm glad I sold it now because it's really settled down. Now, when we look at Uber, analysts are positive on the stock. There had been the story that, hey, robotaxi is going to kill Uber. And I don't think that's going to happen. If anything, it's just going to change their industry over time, but it's not going to be an immediate impact. I think it's going to happen over the next 5 to 10 years. And these guys are growing. They're growing nicely on a big number, bringing down their PE ratio. They're going to get to a teen PE ratio quicker than both DoorDash and Grab, and they're pretty darn solid. So their size and I think the attractiveness and name recognition of Uber will make them a more stable company. It's been doing okay over the 1 year, doing well in 2025. So overall, that is Uber. Now, looking at the valuations of these companies, let's take a look at all three and see where they value. Uber, I think, has a fantastic discount because they drive so much darn cash. That cash looks phenomenal. And that's a nice discount. Now, our friends at Grab, they don't drive a lot of cash, and their earnings are pretty tiny. Okay, they're growing it, but they're small. So the discount on Grab isn't all that great. Okay, Lyft is discounted, by the way, and then DoorDash. Let me find that one for us. DoorDash is discounted by 28%. So as I compare the three, I come out with Uber ahead because it's more stable, better recognized, has better, stock price to discount, percentage. It has a path to participate in the robo-taxi potential business. It has the opportunity to grow. A lot of good things. DoorDash is beginning to show that, hey, they have kind of a single business, and that might be a limitation on their business. If they can maybe DoorDash can acquire Lyft. Hey, there's an idea, huh? DoorDash is a $79.5 billion company, and Lyft, I think, is pretty small. So Lyft is an $8 billion market cap company. That would make a lot of sense. Then our friends at Lyft are cranking out some good cash, by the way. And I think Lyft and DoorDash together would make an excellent combo because both sides can help. Like Lyft does have a pretty big customer base. DoorDash has a big customer base. They can kind of cross-pollinate and say, hey, if you're a DoorDash customer, you're going to get some free Lyft credits and vice versa. That totally makes sense. That deal should happen. And then Lyft doesn't have a bunch of debt. So this is a really nice acquisition target. Strategically, I think DoorDash should acquire Lyft, make themselves more valuable. But overall, to answer the question that Shamba has, he wanted to know, what are thoughts on Grab? Grab is not an investment I would make. I got other businesses ahead of it. I've got Uber way ahead of it. I even have Maple Bear way ahead of it, which is Instacart. I mean, if you want to take a chance, Lyft has really been doing great. When we look at their stock chart, it's really rewarded investors that were willing to take the chance on Lyft. I think the recognition of its value through the form of cash flows and profits, that 53% higher on Lyft. And you saw their market cap. Market cap's tiny, 8 billion. So these guys can double in price, and there'll be a $16 billion market cap business. Not a big deal. They could be acquired, and immediately investors would be like rewarded. Hey, we're going to pay you 40, 60% more than your stock price. I think that's very, I think the chance of Lyft being acquired is there. I can't say if it's 5% or who knows. It just looks like an attractive business. So what are your thoughts on Grab and any other company that I covered there, Daryl?
I've got Uber on my buy list today.
Okay.
So to set up Grab, I added 2 auto support lines. This one was resistance 4 times. You can see where I've got the points marked where it come up to test that and was pretty much rejected. Then it broke out in October of 2024. And this one acted as resistance here and here, and it has broken down below that at the moment. So if we go out to just 1 year, these are shorter term trend lines. And this one is connecting 3 bottoms. And it broke below that, looks like on the 14th of November. And then this downtrend line is connecting 2 points. And we can see that it's well below that at the moment. Today, it looks like it's opening a little bit higher than it did yesterday. We'll see how that ends, but this is seven straight days of selling, I think, if I'm counting those correctly. The RSI is getting close to being oversold. The PPO had a negative crossover back in end of September. It hasn't really recovered. It went into negative territory at least a couple of weeks ago. And it looks like the divergence between these 2 moving averages is getting quite a bit wider. The money flow is currently negative, and we can see that it's been in distribution mode since about the 4th of November. It did trade below the 200-day yesterday. It's opening below the 200-day today. If it stays below the 200-day, then I think we have lower prices in store. The 50-day started rolling over on the 18th of November, so about 3 days ago. So it's starting on a downward path at the moment, and the 21-day EMA is also moving downward. So I think we have lower prices in store for this one, especially if it closes below the 200-day today.
Yep. So, there's options there. You have 4 options total, right? You've got Grab, Uber, DoorDash, Lyft, and you've got all discounted stocks. So the one thing I would say is, Grab is operating in a region that gets those companies get discounted past or more than, let's say, a US based company. And that's just the way it is. I don't know why, but it's just the way it is. So keep that in mind, that investors are not going to, be lured into the Grab investment all that quick. And the last point I'll make is Uber does own a part of Grab. I think they own 20% of the company. So when you buy Uber, you're kind of buying Grab at the same time because they own a good piece of it. They gave Grab their market share in that region in exchange for 20% of the company. All right. So we are off to the races, checking out stocks you guys want to check out. Before I move on, I wanted to make everybody aware. So the stock analysis team put together a really nice program. And if you visit my X profile, and I'll repost this after the stream, but you can also hit this link here. I put it in the chat earlier, and this is a contest. So you can go in and do a price prediction on Nvidia, and they're going to kind of take the predictions at midnight this Sunday. So I guess before Nvidia opens on Monday. And then whoever gets closest to the price that it's at is going to get 3 free months of stock analysis. And it'd be fun just to participate, see who's closest. I'm already seeing that people are guessing. You just go into the particular post And then below, you just put in the price target you think it's going to land on. Good luck, and I hope you have some fun with it. All right, so let's take a look at some new posts on the chat. Bo, good to see you, buddy. Are you worried about Supreme Court messing up Uber? No. I don't know that there's any big case going up to the Supreme Court involving Uber. I'm not worried about government oversight at the current time. I think the big scare to the public might be, is robotaxi going to come in, and then we're going to have a lot of unemployed taxi drivers. We're going to have a lot of unemployed drivers that were driving on Uber, Lyft, chauffeuring, and all of a sudden you have displaced workers. So that might be a political topic that might get attention. So these robotaxi companies may be limited. That's just something that I'm thinking may happen. Haven't seen anything really happen. But the current administration is less regulation, let businesses kind of grow and do their thing. So I'm not worried about the Supreme Court getting in the way of Uber. Good to see you, Bo.
According to Gemini, the Supreme Court case has already been resolved. It was denied on October the 6th, 2025. So the Supreme Court case is closed, but there are lower court ongoing cases.
Got it. Yeah, thanks for looking that up. And just so that you know, Shadow Guy, I put CME on the list. That would be a good stock to look at. And Dre, I put CDLR on the list. We can take a look at that. They had earnings, huh? We've looked at CDLR in the past. Jeff, good to see you. Thanks for joining the stream. And I could look at TMUS $5 super chat, or if you become a member, you can request stocks to be reviewed. Thanks for joining the stream. Great to have you. Peyton, good to see you. Okay, so something going on in the EU involving their dynamic payment to drivers. Yeah, there's always kind of some tension with how much drivers are getting. Sometimes it seems like drivers aren't getting enough. So I think Uber will always have to tend to that. And I think some cases are probably going to make Uber look terrible. But I would say that, the gig worker in general, I think it's a pretty good deal for them. I take Ubers all the time because I don't rent cars when I travel anymore. Period. It's just better to take an Uber. I took Uber in Europe, which basically is you use your Uber app, but then a taxi picks you up. That's the way it was in Italy when I was in Italy 2023. In Mexico City, Uber's everywhere. Uber's all over Mexico. And of course, the United States. And I would say that people driving on Uber, it's a good situation for them. I'm sure everybody would want to make more money. So I'm sure that there's always that type of tension. All right. So thanks for the comment there. All right. So let's get back into it. We covered Grab. We covered DoorDash. The market has opened. We are 9 minutes into trading. The NASDAQ is up 42, S&P 39, and 55 on the Dow. Let's look at this heat map, see what's going on. Who is having a good day? Nvidia under pressure again. Wow. I might end up being an Nvidia stockholder if it keeps up. If it keeps selling off like this. Man. Google. What is going on in Google land?
Yeah, man, that thing's been crazy here lately.
That thing is a monster.
Yeah.
And it is a monster that I decided to buy a lot of shares in. Back in that pullback in April, I thought coming out of that pullback, everybody's stock went up, but the market was like, I don't know. Google's under threat from the Department of Justice. Google may be replaced by OpenAI when it comes to search. And all that was, those are the scary stories that children get told, but aren't really reality. And once the market realized that, this stock has just been tearing higher. And I wonder if they are now the third place. Look at that. They just leapfrogged Microsoft and are the third most valuable business in the stock market. Google advancing higher. Now they're aiming to take out Apple.
Looks like Apple is in their sights.
Yeah. And look at this. They're up 58.6% year to date. That's a pretty good rise. Microsoft is under a little pressure. I am buying Amazon. Amazon is my most accelerated buy for the last 2 months. The same feelings that I had about Google 7 months ago, where all these negative stories. Google search is under threat. Google this, Google that. Now Gemini is out. Gemini 3 is being really well received, used a lot. Search continues to grow. YouTube is the biggest streaming platform on earth, growing faster than Netflix. So it's already way ahead, and it's putting a wider distance between itself and the second place participant. The rearview mirror, they see Netflix, and Netflix keeps getting smaller. And the same feeling I had, and analysis and sentiment, is the way I feel about Amazon. Number one e-commerce business, biggest cloud infrastructure business in an era where we are growing cloud consumption like crazy to keep up with AI. They expanded their margins. They have a robo-taxi business. They have a streaming business that's quite successful. They have a streaming advertising business where if you're on Amazon, you know, that space where these vendors, these partners can advertise, Amazon charges for that. That's all margin. And of course, Amazon Prime, they copied the model from Costco. They said, hey, you want to be a Prime member? I don't even know how much it is. We've been a Prime member forever. My wife handles that part of the household. I don't know. Do you know what Prime costs?
I've been a member for probably at least 15 years.
Yeah.
And I never look at the price. It's
just an automatic.
It ends up in October or something like that. And I just pay it because Amazon's at my door nearly every other day.
Same here. It's so good. So how can the world doubt Amazon? It's like just irrational. So the way I feel about Amazon is how I felt about Apple, Alphabet. And I think we're going to see the market realize that these two businesses, in my expectation, are going to be 1 and 2 in the next 2 to 3 years. That's my expectation. And that's how I'm investing. Our friends over at Meta have, been sent to the principal's office for spending too much capital in their data center and not doing their homework, not turning it in on time, and not showing revenue growth directly related to AI. And therefore, the CapEx is being spent without a direct link to return on investment. And you can't do that. There's a metric, return on invested capital. That is a metric that a lot of investors look at. It is an important metric. If you ask Warren Buffett, he says you can judge a company by how well they manage their capital. If they put capital to work and they get a great return on it, that's a very good business. It's a very good management team. So Meta got sent to the principal's office. They've had detention for since they announced their earnings. And maybe now that they've written on the chalkboard like Bart Simpson's had to, I will not overspend on CapEx. They had to write that on the chalkboard 1,000 times. And maybe now Zuckerberg's like, okay, hey, let's lighten up on the CapEx spend. Let's pump the brakes. I'm a big Meta stockholder. I want them to do well. I believe the business is fantastic, but you can't spend that kind of CapEx. If you have something to show for it, keep spending. If you don't, pump the brakes. TSM has become a nice opportunity. I've been buying into TSM. That's a nice little opportunity. And coming down the list, Walmart. Look how valuable Walmart is. Incredible. All right.
They're moving over to the NASDAQ too. They've been on the New York Stock Exchange for 57 years, I think, and they're leaving the New York Stock Exchange in favor of NASDAQ.
I guess one outfit has better computers than the other. All right, so we don't have a lot of earnings today, just a couple small ones, BJ's, and I don't think there's anything that we're going to cover from that respect. So let's get back. Oh, thanks for looking up Amazon Prime, $139 a year. Sounds good. I don't even know what Costco costs either. My wife's taking care of that. So Michael, good to see you, man.
I think they're about the same. We're an executive member, and I think it's $135 dollars a year.
Yep. I got to get to Costco. That reminds me. And I got to stay out of the store next week, man. Going to Costco during Thanksgiving, that's like, man, that's a hazard pay assignment right there.
You need to love your fellow man if you're going to do that.
But although the checkout lines at Costco are really good. I mean, is there a self checkout where you're at?
I think they have one. Nobody uses it, but they're there.
That's why I think it's great. Nobody uses it. And I kind of go out there. And I mean, when you go to Costco, you buy like 5-6 items and it's $250. So scanning those is easy. Boom, boom, boom. And we're good to go. Put in your payment method. Well, you first put your membership card and then you're out of there. So I'm good with that. And of course, Home Depot's got that as well. Like the self-checkout at Home Depot, unless you're buying big stuff. All right. Let's talk about CME Group. Together with its subs, operates contract markets for the trading of futures, options, futures contracts worldwide. It offers futures and options products based on interest rates, equity indexes, foreign exchange, agricultural commodities, energy, metals, as well as fixed income, foreign currency trading services. The company provides clearinghouse services, including clearing, settling, and guaranteeing futures and options contracts. So these guys, a very storied history. There's been movies made on it. There's been documentaries. And it's not the same CME that used to exist. Like 40 years ago, it was a pit and it would be a physical sport, contact sport, where these traders would trade commodities and stuff. Now it's this fully computerized, organization. And these guys are relatively stable. They've been growing nicely. They pay a nice dividend, 4%. That's looking pretty good. $99 billion market cap with revenues at 6.39. Analysts, 12 of them cover it. There's a argument among the analysts of what price target is correct. We've got some above, some below. On average, they think it's fairly priced. And this is a stable, growing business. Slow growth, single digit. But for an older investor that wants that dividend, this isn't a bad idea. This is a profitable necessity business. They mean, we do a lot of agriculture, a lot of commodities, and this organization handles a lot of that. So, um, earnings per share is going to expand nicely. P/E ratio in the low 20s. That looks good. So overall, this looks like a good investment for somebody who wants a good rate of return. I don't think this is going to be your top performer in the portfolio, but has it been selling off with everything else? Look at that. It's been standing up tall, nice and tall. Everything else is falling, and CME Group is rising. Very good. Now, I don't know that I have CME Group as a valuation. Let me take a peek. Then I'll turn it over to you, sir. No, I don't. And so CME Group, I think, would be a good investment. Again, lower risk, stable. Can't argue with it. I think you're getting good pricing on it. What are you seeing in the charts?
So what I was drawing, I'm on a 3-year chart here, and we had a long consolidation period, September of 2024, and it started back in September of 2023, where it just traded sideways for a year, and then we had the breakout. And if you've listened to me very long, you know how I feel about trading breakouts. So we ran up basically, I'm going to go to there, 30%. Now we're establishing another consolidation or basing period that started, you could probably say, in March. I'll need to draw this box back just a little bit more. So what I'd be watching for is in any breakout of this box. So any break above these highs would be something that would be very interesting to watch and play. I really do like trading those breakouts. Are pretty powerful. So 50 days upward sloping, the 200-day is upward sloping. They have been on a little bit of a pullback here recently, so the 5-day is downward sloping. The 20-day had been rising since about the 3rd of November. It is flattening out a little bit, but it is trading above that 21-day EMA today. The RSI is positive at 53. The PPO is positive, but we did have a bearish crossover yesterday. And the accumulation is at nearly a 52-week high.
So it's setting up nicely.
Yep, it is setting up very nicely.
Yeah.
If it pops up above this, that would be something to really, really watch and trade it. These guys make a lot of money because of all the options trading that goes on these days.
Yeah, absolutely. Looks good. Perfect. So that is CME Group. I think the next one we want to hit is Robinhood, which came up. And before I go there, let's take a peek at what's working in my portfolio. This is my portfolio. I'm sorting it from best to worst. And right now, Intuit is making it happen. Up 5.5%, had really good earnings. And as I started saying 2 months ago, Intuit, from my observation, is kind of a gold standard business. Their TurboTax software is like, it's just an automatic. It's like Amazon Prime, you buy it. A Costco membership, you buy it. TurboTax, you buy it. Do your taxes, done. And their other software products like QuickBooks, super sticky. Customers just buy it and buy it and buy it. So when Intuit this year started to be sold off, man, it was an opportunity. So I started buying into it. And software has not received a lot of love from the market. The market's like, hey, software businesses are not all that great. So it's been buying into data center, semiconductor, but kind of leaving software companies like Salesforce, Adobe, Nice. I can go down the list of 25 software companies that are, I think, priced too low, but Intuit is having a very good day. I thought it was an opportunity to pick that up. Reddit was a nice opportunity earlier this year, and it's moving up higher, but it's had a rough 1 month. Google, you just keep going, Google. Coinbase up, although Bitcoin is down. Look at that monthly return. No bueno. Not good. New holdings. This is a tiny position. Just started to get back into new holdings. It's having a good day. Target. Just started getting into Target on my side. I think Target's setting up really, really well. Nice dividend. It's a stock that's been beat up, sold off, taken out with the trash. Don't want Target anymore. But their forecast is that they're going to start growing. Their margins are expanding. Well, in my book, that's an opportunity. So I'm buying into it. It's having a good day. Food 2 having a good day. Instacart having a good day. Pfizer, got back into Pfizer. I'm seeing that healthcare is probably going to do well. Probably going to do well in the future. So that's what's going on with my portfolio. Let's take a look at the next stock, which is going to be Robinhood. So I don't think Robinhood needs an introduction. This has been a very good stock, although more recently it has been feeling the pressure of a high stock price, going down 21%. But hey, I'm not complaining as a stockholder. You go up 197%, I just say thank you. And $97.2 billion in market cap, revenue of $4.2 billion. The PE ratios are pretty elevated, but you'll see that these guys are growing 10% discount, according to analysts. Now, analysts have been skeptical of the company. There still is some skeptical analysts saying, Robinhood, man, that app they put out there, that thing's a toy. It's a game. They gamified investing. Yeah, they did. Isn't it great? And speaking for myself, I think investing in stocks is awesome. I think it's fun. I think it's the biggest chess match of my life is analyzing companies, putting my capital to work, constantly looking at it. Yeah, they gamified it, but it was already a massive strategic game for each investor that wants to play it. So these analysts, I think, are a little too clingy to the past and need to get with it. Some analysts are more optimistic and feel like, hey, this business is really growing and booming. What's wrong with a business just growing and booming? Nothing. This year, 2026, they're going to grow by 21%. Their profits are going to expand, bringing down their forward PE. Their PE is going to stay elevated. Now, that's a problem unless they can keep growing fast. They have gotten themselves into the prediction markets business. Of course, they're in crypto. They're in a lot of things that are very modern, like new things, new shiny objects. So that's a high level Robinhood. It is a stock that is currently under pressure. And really where the market goes is where Robinhood is going to go. And this is what I mean is if you have markets that, we have a good correction, hey, we get some stock prices that are more rational, and then we get better trades out there, and you get more volumes. Robinhood does well. If crypto gets back on its feet, starts to rise again, Robinhood's going to do well. If prediction markets continue to grow and grow and grow, Robinhood's going to do well. Right now, as I speak, I think there's a 33% discount on Robinhood. And with this sell-off, it's not a bad idea. I'm not buying any more shares because I own a lot of Robinhood. And it is relatively a small business, so it's a riskier business. I don't have the same sentiment and conviction that I have with Google, Robinhood. Google's been doing it for 20 years, being asked tough questions for 20 years. been sold off at times for 20 years and has bounced back and shown, hey, we are an awesome business. Well, Robinhood's kind of, you know, it's getting there, but I just don't have the same confidence. But I'm really glad that I bought the stock, believed in it, and I'm sitting on a really nice gain of Robinhood. What do you think of Robinhood, Daryl?
So I like this 2-year trend channel. And basically what a trend channel is you draw a trend line, and I've connected it to as many tops as I could connect to. And this one has support at 1, 2, 3, 4, 5 points over the last, since December of 2024. So nearly 2 years. And then I just make a copy of that line, pull it down, and try to capture as many bottoms as I can. So this one we had to pull down below that a little bit. Here we touched it. Looks like we touched it there, pulled down a little below it here, traded right at the lower downtrend for at least a month. And then I just make another copy and put it in the middle and make it dotted just so I can kind of see where the center of the channel is. So that's how that channel got drawn. And this was several weeks ago when we looked at Robinhood. So it had recently traded up to the top of the channel. It's been trading below it. It's crossed down below the midpoint. If it hits the bottom of this channel, that would be an awesome time to be in. That's just slightly above the 200, which would also provide another level of support. That's it looks to be about 20% away. I don't know if it'll get down quite that low, but anywhere close to this lower trend line would be a really good time to get into Hood. The RSI isn't quite oversold yet. Looks like it's getting a little bit of a bounce today above the 30 line. The one thing I like about Robinhood and the RSI is every time it hits a peak, the RSI is also at a pretty high level. But when it makes subsequent peaks, the levels are almost as high as all the previous RSI readings. So this one was just slightly lower than the previous, but not much. And it has pulled back since then, which a lower RSI from a previous peak would indicate would probably happen. But the PPO showing a little bit, well, I don't know about that. I'm going to take that one back. The money flow is negative right now. The accumulation is staying fairly strong, though. So the overall money flow, or the cumulative money flow, is staying pretty flat, even though the raw money flow day by day is pretty negative at the moment. So they have outperformed the S&P 500 by only 176%. They've outperformed the XLF, the financial sector, by 192%. The outperformed their industry group, which is investment services, by 175%, while that industry group on its own has outperformed the S&P 500, but it's sitting just right at the break-even point. So it's performing relative to the SPX pretty much right on target. So this is definitely one of interest, and I'll even be more interested if it gets down to this lower trend channel, which it has done several times. It's not like it's never done that before.
Very good. So thanks for covering that. We'll see how how Robinhood trades. Let's turn our attention to Cadeler, CDLR. It's so incredible to see a business do what they're doing here. These guys install these wind props, I guess, turbines that will turn as the wind blows, create electricity. That electricity goes and powers mostly Europe. And these vessels, they get to its location and then I guess put themselves on these columns, these piers, temporary piers, and then boom, erect this device to capture the wind. Pretty incredible. And they are going through a growth spur. And no big surprise, we need more power. We need more power. We see power generation companies, for example, General Electric, that produces turbines that you put natural gas into. It turns the turbine. It produces electricity. Well, these guys are putting these wind farms all over what looks to be Europe. That's where they are primarily located. And when we look at their overall business, one thing that's a surprise to me is, why is the stock selling off? Like, it's a new IPO, sort of, 2 years old. But we need more power. So from October 7th to now, it's just been really selling off, down, about 45%. The 1 year, 34%. So that is a surprise that you have a company generating power, bringing more power online, and the market's not excited about it. That is a surprise because we got companies like, what's that? Oklo.
Yeah.
So Oklo, these guys are like, we have an idea. We don't have a product. We don't make any revenues, but we have an idea. We're going to create these mini nuclear fission reactors. These things are going to be great. They're going to generate power. They're going to put power exactly where the data centers need it. It's going to be great. Okay, cool. When will you know if they're going to work? Oh, in a couple of years. When are you going to have revenues? In about 3, 4, 5 years. All right, so you can have my capital once you show me that this thing works and once you show me how much money you're going to make. Well, these guys can show me. Cadeler can definitely show me that they're growing. They could show me that the market is accepting their technology or their methods. This is phenomenal growth. Why is the market selling this off? Like, it's amazing. This is a trailing 12-month information. Trailing 12 months, they've grown by 200%. Now, they are using a lot of cash. No big surprise. Because they're buying more ships. They're putting more gear on the ships. They're just putting a lot of money into their operation. Their gross margins, 63.7. Very good gross margin. Profit margin, 50%. That's very, very good. Free cash flow, as mentioned, they're spending a lot of money growing, okay? That's, in a way, acceptable to me. Very acceptable if you're growing at those rates. No analysts are covering it. Do we have any forecasts? Yeah, good. We got forecasting data. They're going to keep growing in 2026, get up to $1 billion in revenue, and then stabilize. This is a good opportunity. This is a unique opportunity. What sector are they in? Engineering, construction, industrials. This is a good opportunity. I like it a lot. What are you thinking of Cadeler? What are your charts saying about Cadeler?
Well, they're trading at all-time lows today, and that's a big gap down. Looks like about $1.10 or so today, and all the moving averages are moving lower. They are into oversold territory. The PPO is in bearish territory with a bearish crossover. Accumulation is also at a 52-week low. Money flow is currently negative. I don't know. I don't know why this one is going down if it's such a promising technology, but it is definitely going down.
Yeah, and it's not a technology that's like, pie in the sky. It's been proven. Like in California, we have these wind farms, and we could argue about, are they extremely profitable or not? We could argue about that, but the technology has been in use for like 40 years in California. And as time passes, things get better. Materials get stronger, lighter, less expensive, and these turbines are probably becoming more efficient. I could say that about solar because we got solar installed 3 years ago. We started looking into solar, like 20 years ago. And 20 years ago is like we would have to cover we live in a single level home, literally the whole house, like all the roof would have had to be covered by solar panels. I was like, well, that's going to make our home look kind of funky. And then we shopped it like 10 years ago. It got a lot better, but we still had to like take 60% of our roof and put solar panels on it. And my wife didn't want any street facing solar panels. So then 3 years ago, we looked at it and we only have to cover like less than a fifth of our roof. And we're able to put it in the back of the house, and it generates all the power that we consume in a year. And the guys explained that, hey, the solar panels have gotten a lot better, and they're more durable, and all things that you expect over time. So I'm expecting a Cadeler is having similar benefits of, this is not a new technology. We've been doing this for a while, and now they're putting it offshore. So there you have it. So Cadeler looks really good. I think it could be a very, very good business. And this is a little bit like hydro, right? Where hydro, the great thing about hydro is it doesn't emit pollution. It's water that's moving due to gravity. It turns turbines. We capture the electricity, use the electricity. We're good to go. Well, these wind farms are zero emitting energy producers. Wind blows, they create power. We're good to go. That's it. You have to maintain it, like you have to maintain the turbines that are used in hydro. You have to maintain the infrastructure that takes the power from where it's produced to where it's going to be consumed. But you could also put these wind farms, near populated areas. I mean, Europe is well populated, so they're putting them in the right place. So this all looks good. I just don't understand why the market is selling this one off. And look at the PE ratio, 4.6. That is just nuts. So one thing that it had was a small flaw on the balance sheet, which was the debt to EBITDA is 3.76. And I think they're going to grow into the debt level, meaning as they expand their EBITDA, that ratio will become better and it won't be a problem. But that is one like flaw, yellow flag that I have on the stock. So good luck with CDLR. Looks like a fantastic business, and I think it's going to have a prosperous next 5 years. So that is Cadeler. All right, we are done with the request. Let's take a peek at the stock market. So the Dow, see, this is what I was afraid of. We're going to the red. What's going on? What is going on, stock market? You're giving us a head fake. Yesterday, that was a head fake that was brutal. It was up. Okay, we're looking good. And then slam. Well, are we going to have another head fake today? I don't want one, but it looks like the market's not completely on board with buying across the board. Looking at the heat map, what's working, what's not working. Looks like semiconductor. Hey guys, you know what? We're AMD's really taken a haircut over the last 2 weeks. It went in with nice, beautiful long hair, and it's coming out looking like it just got introduced to the Marines. Nvidia down, Broadcom down, Microsoft down. So this whole space, very expensive space, performed really, really well. Apple is going up higher. The semiconductor support space is down. The other stock that I've been buying into is ASML because it's priced really well now. So ASML and TSM are my new buys within this space. And who knows? I might have to jump into Nvidia at this point. Maybe. Google, not as good as it was earlier, but doing okay. Visa, MasterCard doing just fine. Looks like within discretionary, we've got a lot of green. Home Depot's moving, travel's moving, apparel, auto parts, lodging. All right, looks good. Healthcare, look at UNH. We've got a lot of green in healthcare. Industrials, we got old school businesses, a lot of them in the green. GE, that's tied to this data center, down a little bit. Consumer staples are on the rise. Walmart had a really good day yesterday, but other things like Procter & Gamble are doing well. Pepsi, Coke, doing fine. Materials are doing well. Real estate is doing well. Looks good. Let's jump into UnitedHealthcare. That is a stock that has had a couple good days, but it's had a couple lousy weeks. So it did rise yesterday. It was good to see UnitedHealthcare stand up yesterday when everything else was falling. Good to see that. And it's a $287 billion market cap business. PEs look pretty darn rational. The dividend ratio is near 3. And FYI, if you study UnitedHealthcare's history, it's been a really good, successful stock long-term, like last 15 years. And for the longest time, I was a stockholder for a long time. They would pay like a dividend of 1%. That would just be basically what you expected. But with the big price collapse, it's made it so that it's a pretty decent dividend now. So it's kind of a unique time to buy this particular stock. And you see that the collapse, that happened, it's tried to dig its way out. It was looking good. But over the last month, it has really given up some of those gains. Nothing's really changed. I know the government's made some decisions. They funded the government. They didn't fund the Affordable Care Act. That's going to have an impact on UnitedHealthcare, but not as drastically as some of the health insurance companies that are really focused on the lower income kind of insurance programs. These guys are pretty much tied to corporate employers and other parts of the market. This is in my opinion, the premium health insurance company, both in stock and in what consumers feel about the company. Looking at a forecast, analysts do think it's highly discounted, and the forecast is for them to continue to grow. We're going to see slow growth this coming year. I think it's going to be a year of adjustments because the government did drop some funding for the Affordable Care Act. So they may give up on some particular lines of business, but then they're going to get back into growth. The business is a big business, growing to $500 billion in revenue in 2028. And their PE ratio is dropping. And this business for a long time really operated in the 20s. I think it's going to go back there. I think the market needs to come to its senses around UnitedHealthcare and realize, hey, this is a necessity business. This is not going away. It's not going away. We need health insurance companies. That's just the way in the United States we operate. We need them to be healthy and strong. And this one, United Healthcare, from a stock valuation perspective, offers a really good discount that I am taking. On down days, I buy into United Healthcare. I think that I'm going to be sitting on a very good gain over the next 2 to 3 years. What are the charts showing you on United Healthcare? Why in the heck is the market selling this stock off?
I can't necessarily answer that question, but I can show you that they're doing that. So I'm going to just make some adjustments here. Let's see. Just to make some more room here. So 233 right there. And I'm going to extend some lines out because we haven't updated this chart for a little while. Okay, so I'll leave it at that for the time being. The last time we did review this, I was telling you that I had a buy price of about 312. It had hit that the last 2 days. It's back up to 317 now, but these last 2 days were at the price that I thought it would probably find a little bit of support, and it looks like it has. So we reached a peak in this latest round on the 28th of October. 200 days still down sloping. The 20 day is still down sloping. The 50 day is actually turning over and down sloping at the moment. So I can't explain exactly why they're selling off, but I think there's some pretty good support here. So if you look at where my cursor is and just move on that left gray line, you can see that it does have a lot of support right around this area. So I think it'd be a good time to buy. I'd keep a pretty tight stop loss on it if you buy it here. If you're adding to it, I think this is a pretty good place to be adding.
I will be adding, sir.
Yeah, I think I don't have it on my list today, but I'm going to add it today. I'm going to keep an eye on it, especially if it drops back down to around that 212 area this afternoon. I'll definitely pick up some more.
Perfect. All right. So, quick flyby. Looks like Mike is on. Good to see you, Mike. AppLovin and AMD are dropping. They have been dropping. I think AMD's had a good year, to say the least. And it's giving up some of those gains. And AppLovin is kind of in the same boat. It's had a good year, but it's giving up some of those gains. AppLovin is a stock that I'm accumulating, and we'll buy some shares today. The market's going to offer me this discount, but I'm going to be patient today. I'm waiting around to see, is this market going to give me a head fake? Is it going to say, hey, we're going up and then go down? Well, the rise isn't all that incredible. So I think being patient for me is going to be the right move. We'll see how it goes. Well, thanks for covering United Healthcare. While we're at it, let's cover, I think, some good ideas, given that, maybe the technology space is really selling off because it's a little expensive, but maybe companies like Progressive that are insurance companies might be a good idea right now. It's up 55.55% over the 5 day. It's had a pretty good rise. Insurance rose yesterday while everything else was dropping. Progressive has been kind of the star of the show. For the last 5 years, it's done well. It's grown really well, but it's had kind of a rough year. It hasn't done all that great. And part of it is some of their metrics don't look great, but the return on invested capital is really good. They pay a dividend, 2.16, market cap of 133 billion. And investors have good choices in insurance. You can go Progressive, Allstate, Old Republic. You got Palomar. You got Chubb. Chubb's looking pretty good. And this particular industry is just a necessity. We need auto insurance. We need home insurance. We need the insurance that these guys offer. P ratios are pretty rational in the low teens. Analysts think there's a discount. Looking at what investors are forecasting, analysts are forecasting that this is a 19% discounted stock. And they're going to continue to grow. They need to get their cost right. This is, I think, why the stock's been selling off, is that the cost structure at Progressive isn't where it should be. They're going to improve it, but it's a year of adjusting. And in the future, they will grow their profits. Now, in insurance, I created a video for the channel, released it to members, and really set up all insurance companies kind of in a compare. And here they are from Allstate, Palomar. This one is ACGL's Old Republic. Palomar, this is Fairfax, Fairfax. Old Republic, here's Progressive, Chubb, and Root. And this is how I rank them because of a couple ratios. First, P ratios. Well, Allstate has the best PE ratio. Progressive is pretty decent, but it's a little bit higher than Allstate. Return on equity, Progressive has the best return on equity. Allstate has a good rate, but Progressive's number one. Chubb has the worst one. Price to book, Progressive is one of the most expensive ones. So all that considered, and a fact that the combined ratio is, how much you're spending, covering all the claims and so forth. That metric also for Progressive wasn't all that great. So my rankings are from number 1 to number 8, Allstate being number 1, and down the list there. So it's not a bad space to think about. Insurance is going to do well. It's good looking forward. They had kind of a rough patch coming out of COVID because automobile prices went through the roof. So the expense the insurance companies had went through the roof trying to, like, if somebody got in an automobile accident, the car was totaled, a car that they were paying maybe $10,000 before COVID. Now they had to pay 15, 17, and that's a big bump on cost. So they adjusted because insurance companies get to adjust. They can't constantly lose money or they'll be bankrupt, go away, and we don't have insurance. So they adjust. It just takes a little time. They've adjusted. And now that they've adjusted, they're nice and profitable. And the insurance space lives right here in financials. I think it's a real good place to take a look at, given that the market is selling off hard. So it's a little bit sketchy jumping in these guys. Maybe at some point it's going to be a terrific opportunity. But if you're an investor looking for a more consistent, maybe less risky, lower beta investment, insurance might be a good idea. Your thoughts on Progressive, Daryl, as well as the insurance space?
So I did draw an auto support resistance line that was tested as resistance about 3 or 4 times last year. And then it came down and actually broke through it, looks like for a week or so, and is now moving back up. So I'm going to now change this back to just 1 year now that you know why I set that line there. The 20-day is starting to rise now. The 5-day It's been riding right on along that 5-day until a couple of days ago, but it looks like today it's a little bit higher. We'll probably start pulling that 5-day moving average up along with it. The 200-day is downward sloping and the 50-day is downward sloping. If it breaks out above this line, that to me would be somewhat of a good sign. Looking at the RSI, and I can see that it is breaking out above the two previous highs. And it's only at 58, so I would not be surprised to see it break above this trend line because we're not really anywhere close to being overbought at the moment, and the RSI is higher than the last two peaks all the way back to June when it was at its high. So to me, this looks like pretty good relative strength. We did have a bullish crossover in bearish territory on the PPO. The averages are starting to get a little bit closer together, but that's still looking good. The accumulation, even as during this sell-off, was building. So I'm going to set my cursor right here, and you can see that the accumulation to the right of where my crosshairs are have been increasing despite the price going down. That is a good sign. Money flow is currently negative at the moment, but looks like it could move into more bullish territory here pretty soon. So this looks like it's getting ready to be a buy if you're interested in this kind of space. I don't own too many of these kinds of insurance companies. I do own Jackson Financial. They're an annuity company. I own F&G Annuities and Life, and I own FNF. They're like title insurance companies. But I don't have any of these like Progressive or Allstate or Geico's privately owned now, but I don't own any of the casualty insurance companies.
Mm-hmm. Yeah, I think insurance, with most stocks, when you buy is really important. And like insurance coming out of the bad expense period that they had and stocks were discounted, that was the time to buy. And Progressive is kind of getting out of its trough. It's not a bad time. Not a bad time to consider it because its fundamentals are going to continue to improve. So just a quick rundown on the chat. Bo, let's take a look at Uber in a bit. I got that on the list. DJ, I've got you on CNQ. Got that on the list. Let me turn my attention to a comment that came in that was interesting, and I think it was Benton. So looks like Joby Aviation has filed a lawsuit against Archer Aviation. An employee moved from one employer to the other, and they believe that, hey, that person took some files they shouldn't have. So we'll see if the acquisitions are real. Now, obviously, an employee can't do that, but they can do a lot of other things, especially like in California. I think employment law is different from state to state in the United States. But in California, employees are quite protected. You don't have things like non-compete clauses, unless you're an employee on contract. If you're an officer, there is non-compete clauses because they're paying you for it. Like they're saying, hey, I'm paying you in advance for the right that you're giving up to go work for one of my competitors. That could be done. But if you're just an employee at will, you can go work for the competition tomorrow. They can't not prevent you from doing that. You can't take their documents. You can't take their IP, but you can take your brain, go across the street and say, well, this is how we should design. Everything I learned over there, I get to use it in my brain, and then we can design it. We can't copy their designs. If they're patented, can't do that. If they're not patented, we can do it all day long. That's why companies get patents. So we'll see how that plays out. Thanks for bringing that up. All right, so Bo is super chatting away. Thank you, sir. And what's a good strike price for Uber to DCA down? So let's take a look at that. So Uber, let's look at the 5-year. It's been a successful stock, especially, considering if you bought here, you're sitting on a really nice gain, right? And I'm sitting on a good gain in Uber. I've dollar cost averaged at certain times, especially at these times. So the market was really doubting Uber. Great opportunity. From there to here, we're looking good. From there to here, we're looking good. Now we're seeing this, sell off. So right now is a good time. Very good time. We're seeing Uber sold off by 17.46. Why? Did fewer people begin to not take rides on Uber? No, they keep growing. Did their profits go down? No. There's no reason. There's no real fundamental reason why. It's just selling off because the market's selling off. Okay, that explains it. But that in itself provides the opportunity, because Uber does present, when I value the stock on its cash flows and profits, it's highly discounted. So I'm DCAing into Uber. If Uber stock is down today, I am buying Uber. And
I noticed all of these kind of transportation delivery companies were down much more than the market yesterday. I don't know exactly why yesterday they chose to really drive them down. I think Uber was down, 6% yesterday. Lyft was down 6 or 7% yesterday.
yeah, again, what's the cause, right? Is it the economy's bad? Well, the employment reports we got showed that employment looked pretty good, right? The employment data we got this week.
Yep.
So there's no smoking gun of, oh, this is why this business is going to sell off. So I think I'm going to continue to buy into Uber. It's a big position already, and it's going to be bigger. Looking at Uber, it's probably either number 5 or number 6 on the most valuable stocks on my portfolio out of 35, 40 stocks. So that's where I'm at. So if you're looking for what other investors are doing, this is never financial advice. I'll tell you what I'm doing. I'm DCAing into Uber. I think it's a good opportunity at this time. I think Uber is going to have a very good future. I could see this becoming a $1 trillion market cap company if they continue to expand their business and grow. These guys are going to knock on the door of $100 billion in revenue in the next 5 years. And that's a pretty big business. And you think about the advantage of businesses like this. Hey, we want to put 10,000 more drivers in the city of Tokyo. Great. You don't have to buy one vehicle. You don't have to hire one driver, because the drivers are in partnership with Uber. The driver buys a car, and the driver is basically working and being paid for their production or the amount of service they're providing to the Uber customer. So the ability to grow is quite fast and flexible and requires low capital. All those things are exciting to me. And I think Uber is a fantastic business, could be a fantastic investment. Your thoughts on Uber, sir?
I'm also a shareholder, and they're on my buy list for today. I did put an auto support resistance line right here. So that was tested as resistance in March of 2024. They broke out above that for just a very short time back in October of 2024. They came up and tested it again on the 20th of February. They were rejected, and it finally broke out in May of this year and has been trading higher. This does to me look like a good level of support. So I'm going to go down to just 1 year now that you know why I drew those lines there. Let me go back for just one more second because I have this other trend line. So this trend line begins at the end of 2023. It connects there for a month or so there, broke down below it during the tariff announcement. So I'm going to call that a little bit of support. So it is currently breaking down below that trend line. That's a bit concerning, but we do have pretty good support here. It is also trading below the 200-day moving average. So if it finds support, then I think we'll have support at around $90 per share. And then it's got some work to do to get back up to this. Oh, I did have another line up here, and I couldn't remember why I had drawn that. But it's basically Uber's challenge to break above 100. So it has not been able to do that this year. I took that line off, but because I couldn't remember why I had drawn that. The 50-day is also turning negative. The 21-day EMA is turning negative. There was a lot of volume yesterday, 2x at least. And October the 10th, we weren't anywhere close. We broke down way below that. That was another big day that the S&P just broke below yesterday. And you can see that that was a big sell-off, but we're 12% below that right now. So the the RSI rather is very oversold at the moment. PPO is negative and looks like the divergence between these two moving averages is actually getting a bit larger. I can tell that by the size of the histogram bars. They've been getting bigger and bigger each day. So the shorter day moving average is accelerating downward faster than the 26-day. The accumulation still looks pretty good. We're not far from 52-week highs. The peak in this past year was on September the 19th. We're not too terribly far below that, but there was a lot of distribution in October and a little bit of accumulation in November, but it is kind of in no man's land at the moment. So it's on my buy list for today. I think this will provide some support. If it breaks down through there, then I don't know what to think.
Yeah, I agree that we're sitting at the Friday before Thanksgiving week. So it may be that a lot of investors put their portfolios away until the week after Thanksgiving. They may have like cut out for Thanksgiving week a little early. And looking at the market is in the red. Slightly in the red on the S&P. NASDAQ is clearly in the red. So it did head fake us. The morning it opened higher. Now it's lower. The Dow is in the green. Now the S&P is moving to the green. And semiconductor continues to struggle. And I think this is healthy. This is healthy to see, okay, you guys are doing great. 3-year charts look incredible. And these 3-year charts look incredible. These 3-year charts look good. And now we're rotating into some of these other sectors that exist in our economy: healthcare, staples, industrials, restaurants, home improvement, apparel. Retailers came in with some pretty good earnings, by the way. TJX had good growth. Ross had good growth. Walmart had good growth. So the consumer's spending. So according to the employment data, there's jobs and consumers spending money. That does bode well for the holiday shopping, right? Which is, I don't know if does Black Friday still have the spike in buying that it used to?
I don't know. I've only been Black Friday shopping one time in my entire life, and I swore I'd never do it again.
You barely lived, got out of the hospital, and decided,
Well, I'm a
not for me.
people watcher, so I went and sat on a bench somewhere in a mall and just watched how stupid people could be.
Who needs
On
TikTok when you can do that?
exactly, yeah, that was my form of TikTok before mobile phones.
You would not catch me within a mile of a retail store on Black Friday.
Yep, it's
No
just
thanks.
too easy to shop online now, so I think in fact, I just got an alert this morning from Amazon that Black Friday sales are going on, and it's the Friday before Black Friday. So
Get an early jump on Black Friday.
exactly. So I got my mouse here, and I'm good to go.
Yeah, good luck. Good luck. Yeah, and retailers are doing well. I know some people like shopping; they enjoy the process, so good for them. Um, but it's good to see this rotation. Very good to see that. Now, it's just a couple of days. I'm not going to get overly bought into, okay, we're rotating, right? But it's good to have diversification for this reason. If you're diversified and own a little Procter and Gamble, you're glad you did so. I've been buying into UPS. I feel like UPS is a real good buy. It's been beaten up, thrown away. UPS has been rallying over the last month. So I'm glad I was doing that. And so there's just a lot of examples. UNH is up nicely. Pfizer's up. Other healthcare related stocks are up. Looks really good. So that looks good. The rotation is happening. Regional banks are catching a bid. The big banks, not so much. Visa, MasterCard. I think these guys are catching that bid because TJX, Ross, Walmart is saying, oh yeah, shoppers shopping. Well, they're going to use their Visa card or their MasterCard card. So the volumes are now expected to be fairly good for these guys. I'm thinking that's the case. And PayPal's catching a little bid. That's good. So it's interesting to see the market move. All right.
There's only two sectors, well, three now, that are in the red. Utilities, energy, and technology is at the bottom of the list. So you can see the three sectors there. And I'm also noticing the advancers and decliners. This is somewhat good news. So we have NASDAQ where the advances are just barely over 50%. And that's where the struggle is in the markets for the most part right now. Yeah, the S&P and Dow are both up. NASDAQ is just barely down. But seeing this, some of these other markets actually getting some love maybe for today. And we can see that 82% of the SPX is advancing, only 17 are declining. So to me, that's somewhat good news.
It is. It is. I think for a while it's been those big valuable companies making the indexes go higher, but a lot of smaller caps were not participating. It looks like we're seeing a day where they are participating, which is good to see. All right, we had DJ wanted to talk about CNQ. That's Canadian Natural Resources. This is an oil exploration company. They get crude oil, natural gas liquids, which are becoming more and more valuable because natural gas is going to be used in a lot of ways for that data center power that is needed. And they have large oil reserves. They most definitely do. Canada has massive reserves. This pays a nice dividend of 5%. Very good dividend. P ratio is pretty rational at 14.6, 14.4. Huge discount according to analysts. Wow, that's a good looking discount. Now, oil stocks have not had a good year. Back in coming out of COVID, they did have very good appreciation. That's because oil prices took off, but oil prices are not high right now. And what may make oil prices stay low is I think I've heard some positive stories that maybe the US and Venezuela might begin some diplomacy. That diplomacy, again, this is early because I know the tensions are pretty high there. But if diplomacy works and that leads to Venezuela is going to be able to put their oil on the market, that's going to keep oil prices down. That's good for the consumer, but it's bad for oil companies. In Venezuela, I know that Saudi Arabia is considered they are a massive oil producer. But the last time I looked, Venezuela had larger reserves than Saudi Arabia. So that's a big oil producer. And if they come into the market, it's going to keep oil prices down. Again, good for the consumer, bad for oil stocks. Nonetheless, this company is priced accordingly. And when you look at their forecast, it's expected that this coming year, the revenue is going to be a little light because of the oil price per barrel, but they're still going to generate a profit. They're still going to be profitable. They're still going to pay that dividend. It's not a bad idea at all to play on energy. If we have some type of shock to the oil industry, if there's some kind of new war engaged or something that removes supply, I think it could be meaningful. I own energy enough to just diversify into it, but it's not a major part of my portfolio. It just doesn't perform well enough, and I don't want to tie my portfolio to oil prices. That's just too. I have no control. I would have no control. I'm just dependent on oil prices, and I don't want to be the victim of that. Any thoughts on CNQ?
They did break above a downtrend line that I've got established at 10 April 2024, and it's connected at looks like 4 different points. So they have broke out above that. But one thing I see today, it rode that 5-day moving average up, and today it's actually trading below it. There were some prices here in the $33 range where when it got back down to that price, some buyers stepped in and drove it up 50 cents a share or so, given that we've been open for just an hour and a half. But it is trading below that 5-day moving average. If it closes below that today, then it'd be interesting to see what happens early Monday and Tuesday. If you start seeing it drift lower, then this 21-day would come into play. The 200-day is moving upward, as is the 50-day moving average, and the 21-day is upward sloping. I see the RSI is starting to lose a bit of momentum. That makes sense given the drop in price today. So it didn't quite break above 70. It doesn't look like, so it didn't move into overbought territory. The last time it really peaked, we did get into overbought territory. These last two peaks weren't even really close to, yeah, I guess they were pretty close to 70, 65 or so. PPO is positive. I can see the averages are getting a little bit closer together today. So I would wait for a little lower prices, I think, but it is breaking above that downward trend line, which is somewhat good news. Hopefully it doesn't fall back below it. That's what I would be watching for.
Looks good. All right. So we caught up on our chat. I was changing a few things up, seeing which stocks are moving in my portfolio. Let me share that with you guys. So it looks like Intuit's still doing well. I mentioned UPS earlier. It's having a really good day. And I think UPS is catching a nice bid because retail is showing that, hey, the consumer's buying. Well, they're probably going to buy a lot of stuff online too. And they're probably going to need to get it shipped either by UPS, FedEx, or Amazon through their shipping. Target, I mentioned Target earlier. I think it's a good play that I'm getting into, just getting into it. I think it's going to bounce back and could be a nice winner. We'll see.
UPS is trading above their 200 for the first time in a long time. So
awesome.
if it can hold that 200 day, that would be some pretty welcome news.
You and I covered UPS.
Yes, we have.
I don't know if that was 45 days ago or 60, but I kind of saw it, kind of high level, like this situation those are situations I look for, right? Good quality business that's a necessity in the economy. I mean, UPS most definitely has competition from FedEx and from Amazon, but it was a good pick, and I'm really glad to see it go where it's going. I think it has a long way to go up because it was so beaten down, and the market makes it obvious at times when it takes a business like UPS and puts it in the wastebasket and puts it out at the curb. And I like looking in the wastebaskets and saying, okay, market, you want to discount UPS that way, and their business is back on, sound footing, I will buy. And I have the same feeling about Target. Geez, about 15 years ago, maybe 20, Target was like the darling of retail. You remember that?
Yep.
They were outmaneuvering Walmart, getting better margins and all that jazz, had a better assortment. And it felt at times, like, well, if you want the nicer stuff, you go to Target.
Target.
Target. And I don't know that they still have that brand equity with consumers, but I could tell you our home, we buy from Target. We shop regularly at Target. Doesn't mean much other than we like their assortment. We like whenever, like, there's little kids in our family, and I don't like buying toys online because I like to look at the toy and think about the child, right? And think, oh, I know that little kid, and I think they'd enjoy this toy. And I like to say that I kind of nail it. And so I like going to Target because they have a good toy section. And I think it's the only retailer now that has a decent toy section. So I go in there and shop for toys. And what other things do we like at? There's some good stuff in Target. Stuff for the kitchen, Target. So Target, I think, is going to bounce back. Pay me a nice 5% dividend while I wait for it to make its comeback. Speaking of dividends, Pfizer is going to pay me a nice dividend, and hopefully they continue to rise. They've been doing well. Colgate, nice dividend, continuing to rise. Google Alphabet, you just keep being Google Alphabet, and we're good. UnitedHealthcare is picking up a bid. Procter and Gamble. CBS has been a great performing stock for my portfolio. And this thing, you know, I don't know if people are observing, like CBS is getting it done. 72% appreciation. And I'm getting paid a 3.44% dividend. What else could a guy want? Absolutely. You just keep doing it. You just keep going, CBS. And they're catching a bid today. And it's a nice diversification play, right? Of course, we make lots of money in tech. Of course, we're making a killing, on these high flyers. But you know what? If things fall off a cliff there, which they had kind of are beginning to fall off a cliff, everybody's going to need a pharmacy. Everybody's going to have to go to CVS to get their prescriptions filled. And they have a huge retail footprint where they sell their product at a good margin, because a lot of their product is simple, a lot of cosmetic sales. They have a healthcare services piece to them, as well as a health insurer. So that's looking good. My top stocks are getting it done. It's good to see some names that are more stable, lower risk stocks make it happen. And I hope it continues. So the market, let's see what's going on. S&P is back in the green. NASDAQ still in the red. Dow looking good. So pretty much where we left it last. It looks like it's probably going to sit there for a little while. Maybe sell off a little bit. We'll see. We'll see. And Benton is not a fan of Black Friday. And then there's Cyber Monday. You familiar with that term and what it's all about? Yeah.
Yep.
And I think Amazon's kind of jumping the gun, trying to get to everybody's wallet early. Everybody is. I think I was in the Best Buy. I was there for another reason. And they were already trying to jump the gun because they're smart. They're like, hey, and Home Depot too. The first one to your wallet is probably going to get the most money. So they're like, hey, jump the gun, get some of that money going so that, consumers are like, hey, I did all my Christmas shopping and it's middle of November. I'm done. Don't have to stress about it anymore. Well, whoever got those sales is probably feeling good about themselves. All right, so let's go ahead and wrap up the show for today.
I see that Nvidia is now only $2 away from the max paying price. So the market makers are definitely driving that thing lower so they can minimize their options payout today.
Really? Interesting. Well, so let's take a look at Nvidia. Let's see if I need to take advantage of this market here, although it's still very expensive. What's your senses on how far down will Nvidia go?
Let me look at the chart real quick.
Look at that, fairly priced. Oh, man.
I think we could probably see about 164 will be the next level of support. And that basically, the reason I have that level of support is we gapped up on the 15th of July. So that if we drift back down to 164, then we would fill that gap, and that'd be about 164.05. The 200 days just slightly below that at 152. I think that's probably less in play at the moment. So I'm looking at around 164.
All right.
For support.
I'll buy it at 165. I'll let it settle down a little more, and I'll buy it at 165. Right now, I think it's fairly priced. What's Astera Labs looking like? Astera Labs is getting closer. I'll buy it at 120. Astera Labs is worth buying, but I'll buy it at 120. All right. Okay, so anything going on with your channel worth noting?
Not this week, and not probably next week. I'll probably end up taking most of next week off.
There we go. And we'll communicate on Discord and see what our stream schedule will be like. But probably Friday might be a good day to take off. We'll see.
That's only a half day of
Yeah.
trading.
Although,
Next week will be pretty light. I wouldn't mind streaming on Monday just to kind of get a feel for where the markets are headed. But Wednesday and Friday, I'm not going to be able to. I'm going to take those 2 days off along with Thanksgiving.
Good for you. I hope you have a great Thanksgiving. Are you getting together with a lot of family, or?
We don't have a lot of family nearby, so we'll have to talk on the phone and do some FaceTime.
There we go.
Videos.
Nice. I'm getting away easy. My sister's going to host, so I got to get the pies.
Yeah.
And getting together with a large group and having a nice meal. And we have to double down because then we go to my wife's family.
Yeah.
So maybe eat at one location and dessert at another.
There you go.
And, it'll be nice to see everyone. It seems like we're running so fast all the time. You don't see everybody often enough. And this is an occasion that's nice to see everybody.
Yeah.
All right. So thanks so much. I wanted to thank everybody who joined the stream for the Nvidia watch party. It was the most successful watch party that we've had to date. We had 5,400 people attend, and we really appreciate that type of attendance. Thank you. We'll continue to do the watch parties, making them interesting and really dive deep into them. I thought I was happy with the level of depth we went on the Nvidia watch party, and hope we can do it again like that. And speaking of Nvidia, if you can get on X and put in your prediction, that'd be awesome. Good luck. Just use the link that I provided, and maybe I can provide it again here, making it easy. And put in your price prediction on the price that you think Nvidia is going to be at in the middle of the night on Sunday, 12 a.m. Eastern. It looks like it's not the easiest task in the world because the stock price has been dropping. It's been moving. For all we know, it rallies late in the day. But maybe you make your pick after the market closes. That would make your chances a little better, I would think. But jump in there. It's very nice of the people at Stock Analysis to put this program together. I appreciate them. And hopefully you have some fun doing this. Hopefully they do this more often. It'll be fun to do this. And if you win, you get 3 free months of Stock Analysis. And I like the service a lot. I pay for the service. And hopefully you get a chance to use it. Other than that, that's it for this stream. We'll stream, it looks like Monday together. And I'll plan to stream on Wednesday and probably Friday because I like to get my head, around my investments. It's just what I like to do. And I got a nice plan for Thanksgiving, thanks to my sister. So I don't have to do much. And then I've got to hang the Christmas lights. So do you hang your own Christmas lights or do you outsource?
What Christmas lights?
That answers that question.
The only time I put up I did after this particular year because I never did. But we were kind of the godparents to this baby girl that was born, and we babysat her for the first 2 years of her life. So we were really, really close to her and her family. And her mom and dad, they just lived down the street from us, and they we're walking down to our house, and they said something about which house is. She called me Dodo. Which house is Dodo's? And her mother told her the only one without Christmas lights.
Ah,
So she laid such a guilt trip on me that for the next few years, at least until she was a teenager, I put Christmas lights up.
well, I hang my own lights, and my neighbors kind of tease me about it. I'm just gonna hang them until physically I can't do them, I guess, because anyway, I could pay somebody most definitely, but I hang them and I offer my sons, hey, you guys want to hang the Christmas lights with me? And I've been offering for 15 years. And to this point, it hasn't happened once.
Yeah.
So I can't transfer the role to the next generation. We'll see if someday they take me up on it. All right. Awesome work this week, Daryl. Thank you so much for everything you do.
Thank
And
you, Victor. You too.
thanks everybody for your support, attending. Thanks for the questions. Hopefully you found our analysis interesting. Have a great day. And if you don't join one of our streams, have a nice Thanksgiving next week. And around the world, have a terrific week. If you don't celebrate Thanksgiving, no big deal. I hope you have a terrific week nonetheless. Everybody take care. We'll see you.
Take care.